The Property Bulletin by London Property, the home of superprime.
5 tips for succession planning for farmers. With changes to agricultural and business property relief coming in 2026, farmers need to start planning now. Tim Frost from Savills shares his advice. Work out what you own by listing all your assets: land, buildings, machinery, livestock, and income-generating interests like telecom masts or renewable energy sites. Include debts, cash, pensions, and investments too. Find out what it's worth and put a value on everything. If you're unsure, get a professional valuation to help with planning. Think ahead and have honest conversations with your family about who will take over the business and when. Discuss future living arrangements and income needs for retirement. Organise your assets and decide which assets are essential to the farm and which aren't. Consider transferring or selling non-core assets early to help with succession and tax planning. Take professional advice. Use a lawyer, accountant, and land agent to create a practical and tax-efficient plan. Good advice now will save problems later. Looser mortgage rules could open doors for more UK home buyers. Mortgage lenders are being encouraged by the Financial Conduct Authority, FCA, to ease affordability tests, helping more people borrow and buy homes. Santander has led the way, allowing customers to borrow £10,000 to £35,000 more than before. Other lenders are expected to follow. This could mean first-time buyers and growing families who previously struggled might now afford a property. The move comes after rising house prices, high interest rates, and living costs made home ownership harder. However, experts warn that while this could help buyers, it might also push house prices even higher. And there are concerns about avoiding risky lending practices that led to the 2007-2008 crash. Santander's changes mean, for example, a couple earning £50,000 could now borrow £210,000 instead of £196,000, helping them secure a £260,000 home. Mortgage rates have slightly dropped recently, but they remain higher than a few years ago. Meanwhile, house prices continue to rise, adding pressure on buyers. Brokers like the Mortgage Advice Bureau are optimistic, but urge buyers to borrow sensibly and focus on what they can comfortably afford each month. Nationwide most cautious on ground rents, says survey. A survey by the National Leasehold Campaign, NLC, found that Nationwide refused more mortgage applications due to concerns over ground rents than any other lender. Other banks like HSBC, Halifax, NatWest, Barclays and Santander were mentioned less often. Ground rents are causing major issues for leaseholders trying to sell or remortgage, with many buyers losing mortgage offers. 63% of failed sales were due to onerous ground rent terms. Confusion remains over what lenders deem unacceptable. But doubling clauses, steep increases, and rents above 0.1% of property value are common problems. The NLC is calling for urgent government action to cap or eliminate ground rents. A judicial review on leasehold reforms is expected in July, leaving thousands of homeowners in limbo. Nationwide's strict criteria suggest it would prefer ground rents to be capped at a peppercorn, zero value, echoing the campaigners' main demand. Wealth exodus from UK speeds up over Labour's non-dom tax changes. The number of wealthy individuals planning to leave the UK has surged as Labour's scrapping of the non-dom tax status kicks in. Inquiries about relocating overseas have tripled compared to the same period last year, according to Henley & Partners. Non-doms will face UK tax on their worldwide earnings. The Adam Smith Institute warns the move could cost the economy over £10 billion a year, with 44,000 jobs and £111 billion in growth lost by 2035. Popular relocation spots include Portugal, the UAE, Spain and Italy. Steel tycoon Lakshmi Mittal is among those considering leaving. London's luxury property market is already feeling the impact, with sales and prices falling sharply in prime areas like Marylebone and Knightsbridge. Critics argue the government risks driving away investment and damaging public finances. Some advisors suggest many wealthy individuals have already left, while others are reconsidering after weighing the practical challenges of relocating. Lobbying is underway for a softer approach, with calls for a golden visa scheme to retain foreign investors. The Treasury insists the new system will be fairer and keep the UK globally competitive. Why the second home tax raid must end. When Michael Gove introduced second home reforms in 2023 to revive coastal towns, no one expected councils like Bradford and Croydon to use the new powers just to boost their finances. Since April the 1st, over 200 councils in England have slapped a 100% council tax premium on second homes, doubling bills overnight. Many owners were given little or no warning, with notices hidden in local newspapers far from their main homes. The Telegraph is calling on the government to scrap this unfair tax. MPs, campaigners and readers agree it punishes ordinary people who worked hard to buy a second property, often in places far from holiday hotspots. In Wales, a similar crackdown backfired badly. House prices fell, the local economy suffered, and second homes sat empty because they weren't fit for full-time living. Even Pembrokeshire was forced to reverse course. Critics say the UK's second home tax acts as a punishment, not a solution. Instead of helping locals, it risks damaging communities and driving people out. The government says it's trying to fix the housing crisis, but mounting evidence shows this tax is hurting more than helping.
Subscribe to our newsletter to receive our weekly bulletins and stay ahead of what's shaping the superprime property market.